next segment called Dhande Ki Baat, wherein we'll deep dive into digital lending as a business. We'll talk a lot more about how the landscape has evolved, how you see it going forward, as well as since you have been a marketing guru, so as to say, how do you think consumer psychology also plays a role in selling a loan is something also we would love to understand from you. Having said that, let's start with the the first things first. Sorry, yeah, early salary, right? That was the first name, and now you changed it to Fibe. So let's start with the origin story for the name early salary. How did that come across? And then we'll talk about Fibe as a name and why the change.
So this was the most interesting case study anyone could write. I was judging
Mm-hmm.
Femina Miss India.
Mm-hmm.
Right. After that, I had an after party to go to, and the young people said on month ends they don't party. There's no money.
Okay.
So I actually on Thursday night, instead of partying, wrote down the case study. Took a
Mm-hmm.
flight to meet Ashish, my co-founder, next day morning, and said, Ashish, isko hum solve kar sakte hain. You and me both wanted to start something. Let's solve it. Sunday met an investor and started the company. The insight was simple. People don't get salary runs out on month end. Can we give it early? So it's early salary, right? While I wrote the case study down,
Right.
while I took the flight, I
Mm-hmm.
googled to see if the name is available as a URL, and we bought it.
Wow. So
Right.
simple but very efficient and kind of conveys the name perfectly, right? Early
Correct.
salary. That was the first product.
And it actually became the category, right? People came
Mm-hmm.
and said, oh, we also offer early salary. When our competition started, all of them said we offer early salary. Right? So we kept playing with that part to say, listen, the great positioning.
Mm-hmm.
But then came the larger piece. We realized that we happen to remain in people's lives for years.
Right.
The first 44 customers who borrowed in the first, let's say, 2 months, all of them were still borrowing with us. 70% of people who borrowed 6 years back were still with us.
Mm-hmm.
So we said if people remain so long, it looks like we are doing something else. Then we interacted with our customers and realized that they have matured. When they were 23-year-olds, they wanted the early salary. But now they want a lifestyle finance product. They want a credit card. They want to take personal loans. They want to buy some things. They like to send some money back home. They would like to do many things in financial services.
True.
Right. And what they loved about us was simplicity in offering, transparent communication, no push. We have never called up a customer to offer a product. There's no sales function.
Right.
Right. And we said, and one word came across every consumer. He said, you're like the new vibe of doing finance. Yeah, it's such a cool thing. We actually combined the two words, finance and vibe, and said Fibe.
Oh, okay. So
It was
that's
as
the
simple as that.
that's
That's
the
why it
story.
is. And of course, in internet parlance, if you get a 4-letter word starting with F, half the problems are solved. Right? So it's cooler. It tells our customers what we do. It was
True.
a word created from our consumers. We didn't write it. They came back with it and said we are living with it, and we'll get people to use it more and more.
Perfect. No, I think that's a really interesting story. So the first one is actually very simple but conveys the product perfectly, and the second one kind of demonstrates the maturing of the customer segments as well as of the company, and creating a completely new name called like Financial Vibe or Five, right?
Yeah.
Perfect. So having said that, right? I mean, you have been into digital lending for almost 8-9 years. So what has the digital landscape being like? The digital lending landscape being like, right? From let's say back in 2013, 2014, when digital lending was just generating leads digitally and sending it to an NBFC, to now disbursing in less than a minute. There has been a complete revolution, and you have seen it firsthand. So, what has your perspective been on the entire evolution, and where have you essentially positioned early salary in that landscape over the years?
So I think founders are a little more quirkier. They come up with some concepts and they just stick with them. So the first
Mm-hmm.
concept we said is money delivered fast,
Right.
money delivered without asking why you need it,
Mm-hmm.
and without the sales team pushing a product. So no call center approach, no trying to push a product. If you want, you take us.
Mm-hmm.
We just kept these three principles alive over the last many years. The product has
Mm-hmm.
evolved.
Right.
In fact, our tech stack is involved. We're in version 3. and seventh version of our scorecard, right? There's a huge evolution in financial services taking place there.
True.
The first part is we said we are fast. Earlier, time was an element of fast. We were the first product in the market to give a 10-minute loan, and people
Right.
said, "Wow, that's fast." Now we have a 8-millisecond loan, so there is
Wow.
no time ever being spent, right? The customers approved like this, and you're done, right? The second part is the ethos and the principles remain the same. We never ask you why you need the money or what you do with the money.
Right.
Right? Of course, we have enough intelligence to figure out what you did with that money, but we never asked.
Got it.
Right? Which means we need to know everything about you, how you are, what is your sentiment, and what more can you do with that product. Right? And that becomes really interesting that today we are a part of your life. We know how you're growing, how you're evolving, so we can do many more products to you. Right? And the third element is the tech stack has evolved to become revolutionary ahead than what people could think
Right.
about. 8 years back, we said we will have digital loan delivered. 3 years back, we said alternate data available for decisioning. Now we are saying it is moved on to a very different level of analysis so that we can predict risk better. We can outperform the nearest player by at least 5 times in risk.
Right.
We can give money to our customer more efficiently, better, and retain him for lifelong.
Got it. So essentially, you have also matured over those years and matured the products as well. But from a technology perspective, right? How do you see? How have you seen the technology evolving over the, let's say, last 5 years, and how has it impacted the digital lending landscape? I mean, from the pure loan origination schemes that were there earlier to now the instant loan. What kind of technology goes behind all of these?
So let's give the first very interesting example, right? Digital lending was we acquire a customer online and somehow try to give him a loan. It could be a call center helping, it could be a form getting help, it could be physical NACH being signed, but money was customers acquired online. Right? Now the technology is really about predicting the capability to pay and willingness to pay. We no more say this customer is good or bad. We now predict whether he'll pay us back on time, yes or no, whether he'll take more money, yes or no.
Got it.
Right? And that prediction is using very high-end technology. So like the first thing that we do is today we capture sound mnemonic. The sound mnemonic goes into NLP to convert into textual mnemonic. That goes into GPT to figure out sentiment, and that tells us whether he'll pay us, yes or no.
Okay.
Where is Fintech? Where is lending in it? None. Right? It's moved to understanding behavior of talking pattern. Right? Of course, the next you try to do is, can we look at spend analysis? The traditional world, you looked at a bureau file and a bank statement to find your salary. Right? We look at how you spend your money. Where do you spend? How often do you spend? What's your behavioral spend? And can we find similar predictive behavior from other people? Let's say if you live in Bangalore and you work in X type of company and you earn 50,000 rupees, do people in the same neighborhood spend similar money?
Right.
And what's their paying capacity? So can we predict a lot more about you so that we can run that business? So it's the cutting edge technology which comes. So typically, see, in a business where everyone can catch up, a bank can catch up in 3 to 4 years in technology. That means you have to invent the next technology every day.
True.
Right? And we believe in destroying what we build every 3 years.
Okay.
So we have destroyed what we built twice to now create what we call as 3.0. It's conversational UI, understanding behavioral science of a customer in runtime.
Interesting. No, I think this really puts a lot of things into perspective, right? I mean, on one side there is essentially players still doing a traditional business, and on the other side there are players like yourself who are building the cutting edge version. And essentially now more than NBFC, from the sounds of it, it sounds like it's more like a tech first company delivering financial services at light speed, right? That is essentially what it sounds like to me. Having said that,
absolutely, it reduces the number of people needed, right? On the demand side, we get 2 million new people a month.
Right.
We do 150,000 loans a month. If I really look at in unsecured land, we do more loans than the 5th, 6th, 7th largest bank combined.
Wow.
right? And we are just 558 employees. That's it.
Right.
We run national operations, 200 city business, giving money, collecting it back. At any given time, we have at least 2,500 crores outstanding to go collect, right? We have at least 60% lower NPA than a traditional NBFC. We are 40% cheaper than a banking product for our consumer, right? And yet we run it in just 658 people.
Interesting. No, I think that is in itself an achievement. Uh, Given the fact
Absolutely.
that you are doing combined volumes of the entire fifth, sixth, and seventh, more than that, in fact, fifth, sixth, and seventh, our highest bank. Having said that, when you started almost a decade back, the problem statement that you were solving for was completely different, right? The early salary problem, right? Essentially, the salary running out of the account, and you were essentially funding the gap, so as to say. So, as of now, what is a new problem statement that you see in digital lending when you look at your segment?
I think the biggest opportunity that we now see is access to lifestyle credit, right? See, people today have realized that they earn 40,000 rupees. If they need money, they can borrow from wherever. But when they want to improve their life,
Right.
let's give an example. A typical software engineer after 3 years says, "Listen, I'm stuck between the 40 to 70,000 rupees salary band. I can't move out of this. I need to upgrade to a Python,
Right.
right? Or need to become a data scientist. It cost him 400,000 rupees of education to do that. Now, he can't arrange the 400,000 rupees upfront.
Right.
So we work with every single digital skill upgradation platform to bring in zero cost EMI.
Got it.
Right. So we said that our customer needs to upgrade their salary. Only then he can have a better life. We said, let's go and power all the skilling companies. We'll bring our customers, we'll help their customers to do. What we saw is almost 97% of their product sale is powered on EMI now.
Oh wow.
So they can't sell their product without us. We believe we stick to the consumer life to make him better. Every customer who's doing the course, at the end of the course, his salary went up by 50%. Now he has a larger paying capacity. And the customer, in a way, likes us for all his products. And his next credit card is also us.
Awesome.
So as he's evolving in life, we are his product available. So thinking through how you're going to help in customer life is the need of the hour.
Indeed. So, having said that, let's kind of switch gears a bit, right? And let's talk about the entire digital lending landscape. Being a really tightly regulated landscape, I mean, there has always been a regulatory risk or a regulatory challenge, specifically in the field of fintech, wherein if you are an innovator, if you are building things in on cutting edge technologies, there is always some sort of, I would say, an anxiety how the regulations might change or how the new regulations will affect our businesses. And this has been very real, and this has had a lot of impact on a lot of digital lending startups across. I mean, we have seen a few PPIs shutting down and so on and so forth. A lot of things have happened. So what has been your perspective around the guidelines that has evolved? Because I mean, given the fact that India itself is with fintech essentially is ushering a new revolution in India itself. I mean, regulator has been very on its toes trying to create new guidelines and adapt to the new technologies, and it's always I mean, so far it's always been a catch-up thing, right? Wherein new technology comes in and then there is a new
The
regulation.
regulator is the biggest innovator in India. That's the most interesting
Exactly.
part. Unlike anywhere in the world, the Indian banking regulator is the
Right.
innovator. Right. So I think we all play the catch-up game. I will articulate this answer slightly differently. Right. The first is knowing regulations, working to build better regulations for consumers. In fact, me and Ashish, both of us are co-founders for the SRO and application for digital lending. The new guidelines have been influenced by the SRO.
Right.
So it's called as FACE. It is the first body created for fintechs by fintechs to work with the regulator. Right. So unless you understand regulations, you understand consumer benefit, you will not participate to build the industry. Right. The second part is you can't build a business where the consumer is not happy. Right? If you are building a business which is consumer is very happy, the regulator is going to like you. And the third part is in financial services, learn to have the license and then do it. There's no hurry. Right? The regulator is a very complex animal because he has to solve a very complex problem. Please make sure you're regulated, because once you're under the regulator umbrella, then you can actually do much larger businesses.
True.
Right? We said we will not launch this business without having an NBFC. So the condition on the seed was give me an NBFC.
Right.
It started from that day.
Yes.
Most people said we launch a fintech, बाद में देखेंगे lending कौन करता है. We said नहीं, हमें entity चाहिए अपने नाम पे lend करना है. Right? And that was, I think, our understanding that play the regulation, play the consumer card, make sure corporate governance is the highest, and then you can put a business which doubles every quarter.
Of course. Makes sense. So, what would be your interpretation of the current new digital lending guidelines specifically related to the FLDG piece, right? FLDG has always been a buzzword in Fintech since quite a few times, but now finally we've got an official seal on it. So what is your view? How it will impact?
FLDG is another form of synthetic credit. See, typically if you look at FLDG was the first thing disallowed.
Right.
And everyone in Fintech said, oh shit, how do we run? We now need financial entities. Right. But at the end of the day, remember when you give 100 rupees and the risk on it, someone has to give on your 100 at least 500 more for you to make money. You can't make ROE efficiency on your own capital.
Right.
See, पैसा पैसे को ही बढ़ाता है. आपको किसी और का पैसा चाहिए आपके पैसे के साथ उसको बढ़ाने के लिए. Right? Now that it took us time to understand how financial services work. Right? But once we all get this, then it's about leverage. A early stage business, no matter how good is he, right, will never get rated more than a triple B or triple B minus. Right? Which means he can never go and lever more than 2x, 3x. Right. Synthetic credit, either co-lending or FLDG, allows you to lever at least 5 times.
Wow.
Which means the efficiency of capital comes in. If you generate, let's say, 5-6% ROA, you can generate 30% ROE.
Got it.
As I always mention, remember, money makes money, and investors have to see disproportionate returns. ROE is the only way showing that. With the combination of fintech getting access to synthetic credit, FLDG, or co-lending, the money that we hold, the capital that we hold, allow us to lever more. It allows us to build larger entity with lesser capital. Today, I have a capital base of close to 1,000 crores. I'm confident I can build a 6,000-7,000 crore AUM without raising any more money.
Got it.
Right? It gives me a huge leeway to build a much larger company.
Understood. So, I mean, a lot of FLDGs, co-lendings, a lot of those jargons are being used, and I mean, people in the industry obviously know about it. But how would you explain FLDG to someone who is not aware about any of the jargon as such? How would you explain it to a layman?
It's very simple. अगर किसी को 100 रुपए देने हैं और उसके ऊपर रिस्क 5 रुपए का है, मतलब 5% people don't pay back, which means at least 5 rupees should be of the person giving the money. Right? You may borrow from someone else to give, but 5 जेब के देने हैं. That's how FLDG is defined.
Okay. And how is co-lending different from FLDG?
So, co-lending, you can maximum do 80-20. On your 20, let's say you borrow a little bit more. So you can do 6 times lever.
Okay.
Right? In FLDG, you can almost do 10 times lever.
Got it. Understood. So, for example, if we say that 5% FLDG is allowed, so if I have 100 crores, then I can give 100 crores as the 5% of the entire corpus and get the 95% as the additional capital from a other lender.
Correct. Absolutely.
And in co-lending, that would be 20% of the corpus. That 100 crore would form the 20% of the corpus.
Yes.
Understood. Perfect. I think there was a bit of confusion in my mind as well, as in how do you differentiate between these two. But thanks for clearing it out. Having said that, right, I mean, you have been in this industry for almost 9 years. So what have you seen any interesting, unique customer anecdotes or customer stories? कभी ऐसा हुआ है कि कोई customer ने आके बोला है, you have kind of completely changed my life or changed my perspective on how finance is done, or so on and so forth? Any interesting anecdotes?
Oh, yeah, lots of them. I think we are also now trying to look at newer cases when people came and spoke about it. I think it was just 3 days back, a customer actually wrote to me. A young girl, she was just 23 years old, IT professional in Hyderabad. Her father needed an emergency heart surgery. Right. It was 2 o'clock at night. The insurance office was not open. Right. And the hospital she was there, we provide a zero cost EMI. Right. She took a flight. She was working in Bangalore, landed at Hyderabad at 12:45. Reached the hospital at 2. At 2:01, we transferred the money to the hospital so that treatment can get started. In the morning, the insurance company agreed to make the rest of the payment.
Oh, great.
So just imagine the father needed an emergency surgery at 2 o'clock. There was no one open. No one could provide 5 lakh rupees. In 1 minute, we made the process happen. What was interesting, it was also that it was zero cost EMI. So no interest had to be paid by the young girl.
That's great.
Right. So these cases come in. But then we still continue to have very interesting customers. In fact, I usually speak to 10 customers a month. I walk up to the call center just to answer a few calls. There was a customer who had paid back at 11:59, right, and borrowed at 12:01.
Okay.
He was right. We should have calculated. He should have saved 1 day interest while he repaid and 1 day less cost of borrowing on next day. He was complaining, and listen, I did the transaction, but you charge 1 day interest. And when we saw, his phone clock was set 1 minute before. Right? We said, sir, your phone clock is not synced to GPS. So you paid 1 day interest by mistake. But I really appreciate what you did. He was the most savvy customer. Most of us never realize that banks calculate quarterly interest. We calculate daily. Okay. So he could save 2 day money. Why not? It's a smart transaction. And we said, great, we'll give you the benefit of doubt. We'll give you the 1 day interest back.
Oh, that's great.
Right? But that's the clarity, right? Look at the clarity in the young man's brain. He is needing money, but he's so savvy. He knows how money is important. He may have saved some 20 rupees only. But he was right. He's supposed to save the 20 rupees. And why not? Save 20 rupees, it helps. Of course,
and the fact that he was able to identify that and he was savvy enough to identify that is also really astonishing.
Yeah, in fact, I would say between 11:50 to 12 o'clock at night, we have the highest number of repayments. And we have the highest amount of borrowing between 12 and 1 o'clock in the morning.
Oh, and
people have understood this benefit, that they save 1 day interest. Why not save it?
In fact, you've already answered my next question. I was going to ask you, what is the most interesting customer metric that you have seen in so far?
So my most important matrix has always been the customer now has become very high pedigree, right? He can go to anyone. Let's say a customer whose bureau score went from 650 to 800. 800 is like the most amazing bureau score you can get, right? You can borrow from any large bank at very large amount, right? I thought that customer we will lose. The 88% repeat rate across the cohort comes down to just 80. And when we call up these customers, sir, you can now borrow at like 14% from a large 10 lakh rupee loan from someone else. He said, yeah, but you guys are so cool. You never ask me a question ever again.
Right.
And listen, you may be a little bit more expensive, right? But you make it up by not selling my data, no one calling up, no one harassing me. And my experience is damn good. Why should I shift for saving? The customer actually told us this. He said, if I shift to a traditional player, right, it'll cost me 170 rupees a month, right? But I'll guarantee you one thing. I'll have to answer 170 phone calls or someone try to sell me something else.
That's true.
Right? For my peace, I don't want anything else. You guys are much better.
No, we've all been there. The spam phone calls never stop. Like once you put your number somewhere, it's gone. You're down the rabbit hole. So no, I mean, that is definitely, I think, worth the extra. The peace of mind comes at a cost, essentially, for these customers.
No, I know. I would say not for these, but of course, 95% of our customers, we are definitely 40% cheaper than the banking product.
Oh, is it?
Right. So that's the most interesting part. The next available product, we are much cheaper than that.
Okay, that's an interesting scenario, because I was always under the impression that banks are relatively cheaper than the traditional
No,
fintechs.
they're not. Let's say the credit card in India operates at 48% interest plus 18% GST, so it's 56%. Right? Our maximum interest rate is 30%. Max. Our average is 24, so it's much lower.
Right. Got it. Makes sense. Uh, Having said that, right, let's move on to the final question of this specific segment. With the advent of emerging technologies, and I think this is a perfect question for you, since you have been implementing it in your business real time, and specifically when you spoke about the version 3.0, you spoke about how we've integrated the cutting edge tech in that. So how do you see the latest tech, be it either the GPT 3 4.0 models, or be it the conversational piece around it, or be it essentially any pieces in blockchain that you find intriguing? How do you see those all pieces of technology impacting the way you lend in the next 5 years? Maybe.
So
Yeah.
I think let's break up into building things to provide to customer. So we're building a new feature. It's known as a smarter bureau understanding.
Okay.
It's actually built on robo development. It needed 12 developers. It's getting built by 2.
Okay.
They're building it on a robo development platform. The intelligence on it has been built on ML and AI models, and no data scientist access, which means earlier to build that intelligence, you need 6 data scientists. Now 2 data analysts is doing the job of data scientists to build the entire model
Oh,
out.
great.
Right? So 4 developers are doing work which needed 16 developers.
Right.
That's the first part of it. Right? The second part of it, the representation was common to every customer. That means you and me will see a single report. This is your score. This is how it is working. But now the report will be customized and will tell you, listen, you're doing this wrong thing. Make this extra payment. Your bureau score will go up or go down.
Oh.
It'll tell you what's going wrong in your bureau. So most people say you can download a bureau report for free or some paid amount. This will tell you what you're doing wrong and right.
And it will also suggest actionables.
Absolutely. And this is
Brilliant.
all built using the new level technology systems, right? We were able to build it in less number of people, using cutting edge work. So my OPEX cost to build a feature got reduced dramatically. And this is what 3.0 is, imbibing the next level technology.
Got it. So what's 4.0 going to look like then?
We also don't know, but I would say we build technology to survive every 2 years. And third year, we have to reinvent to figure out what's going wrong. But let's say some of the work that we are now evaluating, specifically on willingness to pay, is what will be the future of digital lending.
Right.
So sentiment at applying. How stressed are you? Looking at your face, can we predict you'll give me back or not? Look, hearing your voice, we'll try to learn, is there some risk more happening?
Right.
So that's what we're investing. We've been cataloging customer data in that manner so we can introduce these new features. Hopefully, the next scorecards will start carrying these as actionables.
Got it. This sounds super interesting. I'm super excited to see what kind of new features you guys come out with using these technologies. Maybe I'll just download the app and probably stay on top of it. Whenever you're planning 4.0, we'll probably do one more round of podcast, and we'll have you run us through the entire new level of technologies that you're bringing in.
Sure, great, absolutely.
Great. I think this has been really interesting conversation so far. Thanks a lot once again, Akshay, for sharing a lot of insights on the digital lending landscape, and enlightening me as well on the differences between co-lending and FLDG, and how each of them kind of are granularly different as well. Having said that, right now, let's go to the final round, which is probably one of my most favorite rounds of all, the rapid fire round. Simple funda hai. Just 5 minutes, 5 to 6 questions, and you don't get time to think. right? You're on the hot seat.
Got it. Shoot.
All right. Let's start with the first thing, right? What has been your favorite book so far?
Founder's Mentality.
What time do you wake up?
I wake up at 6:15.
Interesting. How do you disconnect from work?
I just switch off.
How? That's the... I'll have to break the rapid fire flow here, but yeah.
I have a little bit of hobbies. I have two. I play golf and I test drive every new car coming in the country.
Oh, wow. That's an interesting one. Okay. Moving on to the next one. What's your guilty pleasure?
What's my guilty pleasure? The love for cars and trying to own the better ones.
We all are in the same boat, at least as far as I know. Having said that, right, which is a favorite quote out of a movie or out of a book?
I would say I'll repeat Founder's Mentality. Learn to sell better. Life is really if you know how to sell.
Got it. One thing that you regret doing as a founder?
Not starting early. I think I was still quite late.
Got it. So, if I may ask, what age did you start up?
34.
Interesting. So, having said that, I think that will probably be... I'll be bordering that age soon.
Yeah.
How do you measure the success for a startup?
Happiness of a founder.
Interesting. And how do you quantify that?
Can he go to sleep without looking at his phone, without worrying what's going to happen tomorrow morning?
Perfect. That sums it up. I think that was about it for the rapid fire round. Thank you for being a great sport. Any final pearls of wisdom that you want to leave the audience with, entrepreneurs or anyone else who's aspiring to be an entrepreneur? Any specific do's, don'ts, or tips?
I think one simple point to entrepreneurs, right? Believe in yourself. The world will say no, but believe in yourself and you will excel the most.
Perfect. Thanks a lot. I think that's really inspiring. Thanks a lot once again, Akshay. It was a pleasure having you here and we had a blast. I hope you enjoyed it as well. Thanks a lot.